Have you ever had an amount of money that you've just come into or that you've been saving up and just sat down and wondered where exactly to invest it? Now, deciding where exactly to invest your money can seem like such an uphill task, but there's a way around it. I want to make today's episode a little bit fun and take you guys through what I would consider in my decision-making process if I had 100K and I wanted to know where to invest it. Welcome to another episode of Finance Friday. My name is Coach Susan. I'm very happy to have you here today. I have my notes here with me. Today's episode is going to be a quick one, so let's just get into it. First thing I would obviously do, we want to assume I already have the 100K. I would sit down and take an honest look at my entire financial situation. Everything combined, from do I have a budget? Do I have savings? And you guys know my signature savings. The ones that I keep saying are mandatory for everyone. Your emergency fund and your sinking fund. If you don't know what a sinking fund is, I'm sure most of us know what an emergency fund is. I will link a video in the description box below that is very detailed to explain to you exactly what sinking funds are. So I would check, okay, do I have a working budget? Do I have savings? What are my financial goals and what are the timelines for those financial goals? So what would some of these things look like? So maybe I've been wanting to go back to school. That's a financial goal I have had. Or maybe something would be, I need to pay school fees for my child by January. That's also a financial goal. Looking at it from the perspective of long term, I would like to own a home, get married, start a family, retire at 45. All those are financial goals. So I would actually sit down and just use that as an opportunity to evaluate my goals. And then I would also look at my risk tolerance. This is so important, guys, because remember we are talking about investing. I have 100K. I feel like I need to know what to do with it. The first thing I would actually check is what is my risk appetite. Like all investments, and I keep saying this time and time again, involve a degree of risk. It is important that you understand what your risk appetite is so that as you're making the investment decision, you want to ensure that it aligns with your risk tolerance. If you're a low risk individual, don't put your money in the stock market. You get high blood pressure. Okay? If if you have already done the low risk investments, again, it's good to diversify, go to the medium to, maybe medium to high risk if you have a tolerance for the same. So that's the first thing that I would do. So why is it important to take a hard, long, honest look at my finances? That would determine if I'm ready to invest. Most of us get money. Like 100K is not all that a lot, but it's a good amount of money. It's a significant amount of money. But then like we get money and we think, oh my God, now I'm ready to invest. And I always love to tell and prepare people when they have come to my sessions, or maybe I'm training and they are very curious, like, Coach, I have 50K, I have 100K, I have X amount of money. Where do I invest it? I will always guide you back to going back to your finances and evaluating your personal finance situation in its entirety. Okay? Now, because we've looked at our finances and we are wondering, okay, and we've checked on whether we have a budget or we have savings. Now, if you did that and you discovered, remember I'm taking you through the decision-making process. You discover you do not have a budget. Guys, slow down, okay? Slow down and actually get the budget done. Because a budget is just a spending plan. It's asking yourself exactly, how much do I need on a monthly basis? And a budget goes beyond the monthly basis. You want to ask yourself, what do I need to do in the next 12 months that requires money? Most of us, when we do the budget, you might end up actually realizing that you need money for school fees. You don't need to invest. You need money to pay your car insurance. You probably need not to invest. I'm not saying that that is exactly what will transpire. I'm just saying if you do not have a budget that includes your monthly obligations together with the obligations at least for the next 12 months, you may be blindsided and maybe lock up money in a particular investment when really it could have probably benefited you elsewhere. Okay, so if I don't have a budget, I would actually really first of all do the budget, because in doing the budget I would see, okay, actually this money should just be invested. Everything and everyone else is taken care of. Now, if you don't already have a budget, I have a done for you template that is amazing, guys. It has a monthly budget tracker, helps you plan for your short-term, medium-term, and long-term projects. It comes with a debt tracker as well, and it is just 700 shillings. I will link it down in the description box below. It's an Excel sheet tracker. It is amazing. Guys rave about it all the time. It's really, really good. If at all you feel like, okay, I need a tracker, but I also need training, I do not know how to budget, I also have a self-paced 3-hour masterclass that will revolutionize the way you look at budgeting and planning for your money. I'm also going to link it in the description box below. Let's keep going, okay? Now, that's the first thing. I check if I have a budget. If I don't have a budget, then I would proceed. The second thing we said is, now let's assume you have a budget. I would find out, do I actually have savings? Is my emergency fund intact? Or is my sinking fund intact? Now, I'm not saying that it is a must for them to be fully funded. We are not working with perfection here, guys. I'm a work in progress. I know if you're watching me right now, you're also a work in progress. So we are not saying don't invest if you don't have a fully funded emergency fund. Absolutely not. You can look at your finances and the way your budget looks like and know that, yeah, this is not fully funded, but I already had a plan. Okay, and one of the things I teach in the masterclass I'll be linking down below is that, like, what is the thought process of saving up for my emergency fund and my sinking fund, right? And savings are absolutely revolutionary, guys. Why? Because when you want to invest sustainably, when you actually want to invest in a way that you can sustain for the long haul, you need to first of all start with saving. You can't be a good saver, or rather you can't be a good investor if you don't have savings. Why is that? Because most of us rush to invest. We've not thought medium term, short-term things that need money, so we run to invest. And what happens when these things come up? We either have to take out debt to take care of them, or two, we have to liquidate our investments when they've not even earned us anything to take care of this immediate need that we have right now. So to avoid that kind of a scenario, just look at your savings first. As in, you probably would need that 100k to go towards like a saving, like your emergency fund or your sinking fund, if you do not have any. So if you don't have an emergency fund, if you don't have like a working sinking fund, please just take the 100k. If I was you, I would take that 100k and distribute it towards maybe at least between the two. A bit goes to my emergency fund, maybe half of it, 50k, and the other one goes to the sinking fund. So we are still on my thought process. So I've evaluated whether I have a budget. If I don't have a budget, I get one done. I've evaluated now if I have savings. Most important savings are your goal-based savings, like your sinking funds and your emergency funds. If I don't have those, I wouldn't necessarily be quick to invest the 100k. I'd probably focus on saving that 100k. Now, let's assume I have evaluated myself. I have a working budget. My savings are on track. I'm budgeting for them every month, funding them every month. If those two things are ticked, this is ideally where I would invest the 100k. So the first investment that I would consider making with 100k is definitely government infrastructural bonds. Now, this is like the most attractive investment option, especially if you are a low to medium risk person like myself. I don't have a very high risk appetite. Why would I go for an infrastructural government bond? Because they are tax-free, guys, and because the minimum investment amount is actually 100k. You could always invest more if you do have. Most of them, especially like in the past year, we've had 3. We had an infrastructural bond that retailed in February this year. We had another one in June this year, and then now I think one just closed for November, an infrastructural bond. So they're not like the most frequent investment opportunities, but when they do actually come up, they are highly coveted. So of course that is the first place I would look. Now, I'm not going to get into details of how they work. I actually have a video that really dives into all of these investment options that I'm going to mention. I will also be linking it down in the description box below, together with some details. This description box below will have so many things that are juicy for you. So check it out. So that's the first place. I would consider investing 100K, an infrastructural bond, simply because it is tax-free. The next investment that I would consider is a bond fund. I'm really into bonds because bonds are amazing for passive income, or for helping you to be able to accumulate money that you could actually use for passive income. Now, we have an umbrella of investments that we call unit trusts. And under unit trusts, we have 4 of them. The most common one, we all know it, the money market fund. But other than the money market fund, unit trust companies actually have 3 other funds. The equity fund that invests in the stock market, the bond fund that invests on your behalf in both treasury bonds and corporate bonds, and then we have a balance fund that is a cocktail of all those. So I would definitely look into a bond fund. Most bond funds in Kenya will pay you at least 9% upwards, sometimes 10, 11, depending on what the market is doing. And just because I've mentioned infrastructural bonds, those ones, especially this year, they've all been 13% and above. So as you can see, it's an attractive interest rate and it's tax-free. Yeah. Now back to our bond funds. Bond funds are just collective investment schemes. If you don't have, say, like the 100K, you could even invest with lesser money. So let's say you have the 100K, but you don't want to put it in one thing. You want to distribute it. So if you put it in an infrastructural bond, you'd actually have to put the total amount, the entire 100K, because that is the bare minimum. However, if you would like to, you have 100K, but I want to split it. If I had 100K and I wanted to split it to maybe 2 investment opportunities, then I would go for the bond fund, because most of these bond funds allow you to invest even with as little as 5,000 shillings. Okay, so that is the second thing, or rather the second investment that I would make. Now, before you invest in a bond fund, find out from your fund manager or the company you're using whether that bond fund guarantees capital preservation. What do I mean? If I put my 100K here, regardless of the fluctuations in the market, am I guaranteed that that 100K is still going to be intact? Find out, okay? So that you can be able to make an informed decision and know whether that is something that aligns with your risk tolerance or not. But I have a bond fund, so I'd definitely invest in a bond fund. The next investment that I would consider with 100K would definitely be the equity fund or the Nairobi Stock Exchange, depending on how well versed you are with stocks. Now in Kenya, there are 2 ways you can invest in stocks. You can either go through a broker and invest through the Nairobi Securities Exchange and buy, Safaricom shares, EABL shares, whatever makes you happy, right? Now, for you to be able to choose this investment option, guys, there's a disclaimer. Number 1, you must understand the business model and the industry in which these companies operate in. 2, you must be aware of the financial health of the company. You want to look at profitability, the debt status, whether they're actually paying dividends or not. Those are very important things. And number 3, you need to be able to be in a position to keep tabs on these companies, okay? And to do your due diligence. Now, there's some guys who feel like, oh my God, that is a lot of work. Where do I even start? I don't have knowledge in terms of like investigating these companies or conducting my due diligence, but you still want your money to be exposed to the stock market. You could, now, if you want to passively do it, like you don't want to be actively looking at graphs, following up on the Business Daily or the Economist to see how the stocks are doing, you could invest through the equity funds. Again, collective investment schemes. The unit trust, we have equity funds that specifically collect money from you, me, 100, maybe 1,000 people who are investing in that fund. They collect the money and they now sit down with their investment analysts and decide which are the best performing shares to purchase that would make our clients some money, some interest, and would still make us some money. So if I had 100K, I would look into also equity funds, especially if you are interested in exposing your money to the stock market. Okay. The fourth thing, or the fourth consideration that I would make if I had 100K to invest, I would consider investing this money or injecting 100K into an already existing business that could use expansion. I have a hate relationship with taking money, like a huge lump sum of money, and putting it in a completely new business that has no proof of concept. Now, if it's something that you're comfortable with, by all means, do it, because how else are we going to fund the businesses? So yeah, I would consider injecting the 100K into a business. However, I always love to tell people that before you start a business, take some time. Okay, do I have proof of concept? Have I thought through how this will work? How will I get a return on my investment? Like, you must have run the numbers. Okay, you must have, like, ensure that you fine-tuned your idea. Why? So that the entire 100K doesn't just get lost in an idea that you'll be like, that was a bad one. Why didn't I think of this? Why did I think of that? I would actually invest this 100K into an already existing business, or if it is a new idea, then it has to be ironclad. It has to be something that you've gone through, like you've looked at it through and through, and as much as it depends on you, you've seen that it is like you've run the numbers, you've done the projections, you've looked at, who's my target market, who am I going to be selling to, what is the demand of this product or service. Like, ensure that your plan is ironclad before you invest in a new business. However, if there's an already existing business that you feel it could use some expansion, like if I pumped more money into this business, I'd make more sales and therefore more profits. That is one of the most amazing ideas. I am such a business babe. I would definitely inject 100K into my business if I got 100K right now. Finally, in case you have no idea, like, yes, you have a budget, you have your savings in check, but then, like, all these things I've been mentioning, the bonds, the bond funds, the equity funds, business, they don't make sense to you, and you feel more confused, and you're like, I need to do my due diligence, I need to investigate what exactly, like, where exactly should I put it? You're not lost. You can park this money in a money market fund. Money market funds are an amazing parking spot for your money that you don't really know what to do with. Why? Because you kill two birds with one stone. Your money is preserved, so you're saving it completely, all of it, your initial capital, the entire 100K, but also in the duration, whatever time you're going to take to now finally arrive at a decision, that money could be earning you interest over the months, because money market funds actually compound your interest on a monthly basis. If you do not know what these things are, the money market funds, I also have a video solely dedicated to, it's like literally a crash course for money market funds. I will link it down in the description box below. So those are the 5 things I would consider doing with 100K. An infrastructural bond, a unit trust bond fund, a unit trust equity fund, an already existing business that could use expansion, or a new business that has proof of concept. And finally, if I still need some more time, I would park that money in a money market fund as I keep learning and investigating what would be the best thing to do with my money. Now, guys, in conclusion, the most important thing when you're thinking investing, these are the things that you need to understand. Number 1, time value of money. Make sure that wherever it is that you're putting your money, especially in financial markets like these assets we've talked about, on the bare minimum, get compensated for inflation. So if inflation is at 7%, it means that the cost of living is increasing by 7%. On the bare minimum, wherever it is that my money is at, it needs to earn me a bare minimum return of 7% and above for you to actually be able to keep up and beat inflation. So always have time value of money in mind. And this is one of the reasons why some of these places we put our money, like some insurance policies that don't even come close to compensating us for inflation. Sometimes we lock our money in SACCOs. We really do not need a loan, but you've put your money in a SACCO, and most SACCO returns, especially in terms of looking at it as an investment, they're not the best investment. So always know what is the current inflation rate in the country you're in, and then check out a good inflation should be one that on the bare minimum compensates you for inflation. Okay, so I hope that this video was helpful. I will be linking so many things in the description box below. I've mentioned all of them. Please visit the description box. You're gonna find more videos that you can watch to actually just facilitate what we've talked about. Let me know if this video was helpful. If you had 100K, guys, let me know in the comment section, where exactly would you invest that money? And if you have questions for me, you know what to do. Please remember to like this video, share it, and also turn on the notification bell so that you can be notified every time I upload a new video. Thanks so much for watching, and I'll see you on the next episode of Finance Friday.